You probably didn't hear that refinance applications went on an absolute tear last week, did you? Well, they did. Applications to refinance a home loan jumped 19% from the previous week and were 30% higher than the same week 1 year ago. Yep, 30% higher than the same week in 2023. And that's not even when rates hit their peak in 2023. To me, this suggests two things. Number one, that people have warmed up to the market rates being the market rates. So if you want access to home equity, you're going to have to take the rate that's offered. And two, homeowners are likely refinancing because they have to, not because they want to. Whether it's a cash out to pay off debt, build an ADU, or finance some other ambition, refinances are here. And next, let's talk about home prices. Sorry, internet trolls, but home prices are already on the rise, as we can see from the 2023 year-end data. Fueled by that darn decline in mortgage rates, national home prices rose 5.2% during the month of November. Clearly, demand for housing is there, and even if you want to make the argument about inventory keeping prices high, you still have to have an answer for why buyer behavior has them willing to pay more than they might have just a few months prior. Yes, math and the ability to even qualify plays a part here, but what we're really seeing is exactly what we were talking about. If the Fed is actually finished raising rates and signals cuts in 2024, then mortgage rates will start declining. Buyers would come off the fence, and that demand will keep prices high or push them even higher. And speaking of home prices, let's talk about the percentage of homes sold that have price cuts as part of their story. If you didn't know, a normal range for percentage of listings that experience a price cut is 30 to 35%. So 2023's 36.5% of homes experiencing a price cut isn't all that bad, even though it falls just outside the range of normal. But we have to remember, this includes all that time when mortgage rates were their highest in 22 years and prices still didn't make this reading rocket into outer space. So what's that mean for 2024? Less homes experiencing price cuts. With mortgage rates easing up and inventory thawing out, the demand still exceeds the supply, and the projected percentage of homes to experience a rate cut this year is only 32%. That's a lot of margin for error in case that turns out to be wrong, and still within the range of what we traditionally consider normal. So with that, let's take a quick look at what's coming up in the markets this week. Monday, the markets will be closed. Tuesday, we get the Empire State Manufacturing Index. Wednesday, we get core retail sales and retail sales month over month. And more importantly, we get the National Association of Home Builders Market Index, and this is probably going to look pretty good. Thursday, we'll get unemployment claims, the Philly Manufacturing Index, building permits, and housing starts. This is definitely the most data-packed day of this week. And on Friday, we have preliminary consumer sentiment, existing home sales, and inflation expectations. And that's it for this week. Remember to like this video, subscribe to the channel, and turn on notifications so you catch every episode.